Good evening and welcome. My name is Valerie Island Davis, and I want to welcome you to this webinar experience and an opportunity to dig deep into the subject of home ownership. I want to welcome you on behalf of the Potomac Valley Alumni Chapter of Delta Sigma Theta Sorority Incorporated, on behalf of the Economic Development Committee, which is chaired by Sora Tevlin Thompson, and I'm going to be pinch hitting for her in her absence as a facilitator of the webinar. I also want to recognize our officers who are with us this evening. If you would just wave to the crowd, our leaders in our chapter, we are very happy to engage with our community on the important subject of home ownership. And without further ado, we're going to get into the meat of it. We have two special guests and experts here tonight. And the first who will present is Ms. Jackie Harris, who is a real estate consultant with Keller Williams Preferred Properties since 2016. And we also have Mr. Louis Lopez, who is a loan consultant with Caliber Loans in business since 1985. We are going to throw up some poll questions because we want to get a sense of what you know and what you're curious about right now before we start. And you'll see poll questions at the end. And hopefully, unless you came in also as an expert, we hope that you will have learned more and your poll question answers will be even more accurate. So with that, I asked Ms. Sora Sabrina to put up our poll questions, after which Jackie Harris will take the floor. So you should see on your screen poll questions. We need the pre-webinar poll questions. So just a second, we'll put those up. Welcome, Jennifer, Leslie, Reagan, good to see you.
Good evening.
Good evening. So there you have your pre-webinar questions. There are 5 of them, so please go ahead and answer, and then we'll get into Ms. Harris's presentation.
Sabrina, it doesn't look like you can select the answer.
Oh, Sheila, that's for you because you're a co-host. Everyone else can.
Oh, okay. I'm sorry then. I didn't know.
And am I giving participants time to answer the questions, and we'll.
You can go right ahead, Jackie.
Okay, good afternoon, good evening, everyone. I am Jackie Harris, real estate consultant with Keller Williams Preferred Properties in Upper Marlboro, Maryland. And as Val said, I have been in real estate for 6 years, licensed in the state of Maryland and the District of Columbia. I love what I do. I love putting folks in homes, their dream homes, realizing dreams, achieving generational wealth, and more importantly, I love educating my clients. And so what I do when I have clients, I sit and discuss the entire home buying process with them, giving them an overview so that they understand step by step what's happening now, what's happening currently, and what's happening later. Sheila, can you hear me? Can you guys hear me? Okay.
It sounds muffled on my end. Is it me? Okay.
Okay,
sorry.
great. Okay. I guess we'll pause when we get the results of the survey. If someone will let me know when the results happen, I can pause and we'll look and see what our the expertise and the results from our audience. If not, I'll begin.
Jackie, the results are ready if you're ready.
Okay, yes, let's check out the results. Thank you. Okay, so 12% moderate knowledge, some knowledge. Okay. So I see different degrees of knowledge. No one's an expert except myself. Really, I didn't take the poll. Most of you own homes. Okay. And 50-50 with purchasing within the next year. So I'm happy to see that there aren't many experts. I'm going to close. Thank you. Happy to see that there aren't any experts, so that the goal is for what I share will enlighten you. For those of you who are familiar with the process, maybe you'll learn something new. Maybe you're going to do it again. Um, we we don't know what the future holds. So this flow chart does give nice schematic step by step of the home buying process. So at the top square, I'll just dive right in. The top um, square says the top two are guiding you, the home buyer, to pick your consultant, choose your team, prepare your team. So you to select a real estate agent, preferably me, Jackie Harris, Keller Williams. Um, and the second step says obtain financial pre-approval. These steps are key. That you're choosing your team, your professional, your advocates. I will advocate for you, my client, my buyer client. I will educate you, negotiate for you, mitigate any problems, and then just be there from beginning to end to walk with you side by side to help you attain your goal of purchasing a home in the state of Maryland or the District of Columbia. Um, that second step with obtaining financial pre-approval, Louis, means choose your lender. And Louis will explain the steps that are involved with that, but that is key in the process. Why do we do that so early? It's basically allowing you to shop with some money. You can't go shopping with no money. So the pre-approval gives you a nice picture of your financial strength. Louis takes a person, the lender, Louis, for example, will take information from you, your credit score, your income, your debt ratio, and determine how much of a house you can buy. So at that point, you've got your real estate agent, you know how much you can buy, you have money, and we're going to go shopping. The next box says analyze your needs in a buyer consultation, where I sit down with you and I do go over this flow chart and we talk about your needs, why you're buying your house, um, what your location is, your timing, the size of the home. And I get to, asking all those questions allows me to get to know you better. And my goal is to help you satisfy your goal and to meet your needs, to meet the needs, A, and to hopefully meet some of your wants, your desires, which is the dream home, or, perhaps some people have to move, so I need to understand the circumstances that surround your choice and decision to buy a home. And that consultation is one meeting. It takes about 2 or 3 hours. We sit and we chat, get to know each other, build some trust and understanding of the process, and then we move forward. The next box says select properties. So that means we have to, with the next box under that, it means we have to view properties. And once I understand your needs and your wants, I can look at the market. The systems, the multiple listings service allows me to view properties on the system, and I send them to you based on your criteria. So before we go out to look and set foot in properties and take a tour, you will receive pictures from me, links to photos that have details and information about the home. Is it in the location that you desire? Is it the size that you want? Is it the style that you want? So those are visuals that you'll receive and pictures that you'll look at. Hopefully, we're in the fourth box. Hopefully, once you're looking at these pictures visually, I do recommend that my clients go out and peep and creep. And that's a funny way of saying go and do a drive-by. So I've sent you an email with a photo of a property that, oh, it's my size, it's my location, I love it. Let me go and look at the outside, and let me go and look at the surroundings, the environment, the neighborhood. I cannot comment on the demographics, the neighborhood, so I encourage my buyers to go out and drive by different times of days, different days of the week, so that you get a feel for the environment of that home to be able to make a decision as to whether you want to take the next step and then go and view the property. And that's when the fun begins. So once you have selected 2, 3, 4 homes that you say, Jackie, I drove by, I like that house over on 123 Main Street, I really would like to see it. And then your realtor, I, make an appointment for us to go and view homes. Pre-COVID, we would go and I'd make an appointment and we would go into the home at a certain day and time, and we would go inside and view the home for about a half an hour slot or an hour slot. But now that it's post-COVID, we have to be very safe. They have minimized the number of people going on tours. It used to be the whole family, myself, my kids, grandma, the maid, the dog, well, not the dog. Everyone can come and go see the home, but now because we have to be cognizant and responsible to COVID, most listing agents are limiting the viewings to the decision makers only. I personally wear masks and I wear gloves so that I can touch handles and open doors. I give my clients gloves so that they can touch handles and open doors and that we can remain safe within this COVID environment. Hopefully one day, of course, we all want to be rid of COVID and we can go back to viewing with everybody and everyone and go and view at our leisure. The box after viewing properties is write an offer to purchase. And that's the scary part. Once you have chosen a home, it's time to put pen to paper. During our consultation, I've gone over the paperwork that's involved in preparing an offer for a home. Prior to arriving at a price for the home, I will prepare a comp report for you. So it's a report gathering recent activity of comparable homes in the area to give you, the buyer, the power to establish an offer price. Now, the benchmark is the list price, and of course, we're looking at homes in your price range at 200, 300, 400,000. When it comes down to actually making an offer, you have the power and the control to determine the exact dollar amount that you would like to present to the seller based on the comparables, based on your experience once we've toured the home, based on the condition of the home. Does it live up to the description? Is it, quote unquote, in better condition or worse condition? There are a variety of things that are components included in preparing an offer that I would have prepared you for during the consultation. A major factor in preparing an offer is competition. So right now, as you all know, or some of you don't know, we are in a seller's market, actually coming out of. The market right now is in so much flux because of the interest rates, because of the war, because the economy. 2 months ago, we were in a straight up seller's market. And like I said, now the interest rate is climbing. Summertime has come, inventory is coming back on the market. So buyers no longer have to throw in the kitchen sink with an offer. They can stick more to list price. And I believe the market is becoming more balanced. So we're going back to the good old days where list price meant offer price. So that's a long discussion about pricing, but of course the state of the market, the type of market you're in has a lot to do with it, in addition to list price, in addition to how much you, the buyer, like the house, in addition to the volume of competition that's surrounding that house. So the next box, we prepare the offer, we have submitted the offer, we give it to the seller through the seller's agent, and that seller will review that offer. Again, in the seller's market, we're in a market where sellers were receiving multiple offers. Are you guys aware of multiple offers? The seller will set a deadline. Okay, the house is on the market. We've set a deadline for Tuesday at noon. Oh, I have received 10 offers. That's pretty tricky. That's a competitive market, as opposed to house has been on the market for 20 days. No one put an offer. The seller starts to lower the price. So the buyer now is in a better financial position and kind of more control with the offer that they propose, and that has a better chance of getting that house. So because the end goal, of course, is for the seller to accept your offer and to ratify the offer together and to go into contract. So this is the breaking point. I will stop and entertain questions because I hope I'm not going too fast. Um, so Sheila, if you could let me know what some questions are, I will address them right now.
Okay. Yes, Jackie, we have a question from Tanya Butler Truesdell. Her question is that I'm interested in finding opportunities through off-market inventory. I would like to know what factors are important in choosing a new home with several acres, less than 10 acres. And then she said, what is the easiest way to determine if a lot can be parceled, and where can I find the zoning codes for the counties in Maryland?
Okay, Tanya, your question is chock full. You said off-market properties. I'm assuming those are some that are not widely publicized, that they're being marketed as for sale by owner. It is difficult for a layman, an average buyer, to get access to those properties. I guess, Zillow has them, um, maybe Craigslist. They're not the safest. You're talking to a professional realtor who kind of sticks to the book, and I prefer to deal with properties that are listed publicly. But you can find them. You're more digging through internet and Zillow on those. As far as the zoning goes, you can once again search the county records to find out the type of zoning that property is falling under. I hope that answers.
Yeah, and then the other part was she would like to know what factors are important in choosing a new home with several acres, less than 10 acres.
If that's your desire to have a home with a massive amount of acres, it's kind of personal, the factors in choosing them. If you're speaking about the home itself, you have your list, your priority, your wish list, your needs list of what you want in the home. I need 4 bedrooms. I need a rec room. I need a 2-car garage. I don't want solar panels. I need 4 fireplaces. I need ceiling fans. I'm not sure I'm addressing that, but in terms of the acreage, if it's for a new build, you have to see if it's perked and ready for the infrastructure. You have to see if it's got septic or well water, if you have the electricity has been run underground for it, if it's public or private, those type of terms. Does that answer, Tanya?
Okay, she said something correct there, category on MRIS for them. So I guess you answered her question. Let's see. Well, I asked the question, what's the difference between a buyer's agent, real estate agent, or a broker? And who should I work with to get the best value for my home?
Okay, if you are a buyer, you need a buyer's agent, a realtor, a buyer's real estate agent. The broker is the operating owner or manager of an entire, not a firm, an office. So the broker is the head manager over several agents. Um, they're the face or the voice or the leader, the operating CEO of the office full of realtors. So you have broker and the hierarchy, you have broker and then you have realtors who affiliate under that. You as a buyer want to obtain and contract a licensed buyer's real estate agent. Does that answer, Sheila?
Yeah, one more real quick and we can move
Yes.
to Louis. I have Kyra here. She says, I'm a first-time homeowner looking in Southern Virginia. And her question was, she said, so many homes quickly go under contract. I mean, as soon as a listing is posted, I've seen it's under contract. Her first question is, if a home is under contract, can I try to put in an offer or is it sold?
In this market, yeah, I don't think it's prudent because there are probably many other offers on the table. I might have to pause if your question is 4 parts and finish. There is time at the end to go through that. I've been reminded to get back to the presentation. So I'm sorry, but let's table that and I'll go back, I promise, to answer that because it speaks to the condition of today's market.
And everyone know that our presenters are able to respond to your questions in the chat as well. So do feel free to put questions in the chat and they will follow up if you need to, because they'll also share their contact information. Thanks, Jackie.
Okay, thanks. So now we're moving into the middle box. The first frequently asked question is, how long does it take to buy a house? The steps that I just went through, these vertical steps, 1 through 7, 8, 9, it takes as long as you determine. You, the buyer, are the one who knows or takes the time to either be picky. Sorry to say, if you're a picky buyer, it takes longer. If you know what you want or you make decisions easy, that will be relatively quickly. Depends on the market as well. If the inventory is low, it will take a long time. If the inventory is high, it could take a long time also because you have to go and see every house. So the first few steps, I can't put a number of days or weeks on that. It's very much buyer related. So the next box that we go through, from the time we accept the contract, we ratify, until the time we take possession of the home, typically is 30 to 40 days. So these steps involved here, there are multiple steps going on simultaneously, but there's so many deadlines, it definitely can happen in 30 days. So we are in the box in the middle, or if you come with me to the left side, the first thing that the buyer and I do once we ratify is to conduct the inspection. You contract an outside third party professional to meet you at the property with the agent to conduct a 3 or 4 hour inspection to test and survey, analyze, I would say diagnose the condition of all of the properties, the condition of the appliances, the condition of the roof. This gives you a better idea of the condition of the home. Then you, if there are any items that you don't like or are broken, we present that to the seller, and the seller will fix them or give you money for them or say that they won't fix the items. All of the moving to the right, the central box, obtain mortgage financing, that is very much Louis' area, and I'll let him go over those details. In detail, he'll go over the credit check, the underwriting, the appraisal, the survey, the insurance. He will talk about that, all of those events that happen once you go into contract. Moving to the right, conduct title search, remove encumbrances. This is done by the title company that your realtor will secure for you in order to help you to settle. They help you to facilitate the settlement of your property. Come with me to the bottom, the last 3 boxes. Once you have dealt with Louis and removed all your encumbrances and handled all the financing, you get your clearing to close, you get the approval from the lender, the final approval. That allows you to close on the property. And then after that, you take possession of your home. In a nutshell. So like I said, that second half takes 30 to 40 days. It's very succinct. It's very much deadlined. If everyone's on their P's and Q's, the realtor keeps track of the timeline, and it can be done to allow you to get the keys to your property. I'll turn it over to Louis to talk more in detail about the financing.
Thank you, Jackie. And please put your contact information in the chat. Thank you. All right, we're going to move on to Louis, the money man, and his presentation. So
Jackie, I'm sorry. Go ahead, Val. You done? Sure. Well, Jackie, thank you so much for that presentation. Val, thank you so much for the earlier introduction. As she said, I'm Lou Lopez. I've been with Caliber Home Loans for about 8 years. I've been in the mortgage business for 30 years, lending money. I'm born and raised in Washington, D.C. I currently live in D.C. And I speak fluent Spanish. So my initial experience was the first-time home buyer market when I first got in the business, but I've expanded to all sorts of parts of the business, first-time home buyers, people moving up, lending on the country, renovation loans, things like that. So as you can see, there is the first page of my slide, buying your first home with Caliber. Next page. And introducing Caliber. We're a national lender. We service over $600 billion worth of loans. We're one of the top lenders in the country. And what I mean by when we service our loans, when you go to settlement with Caliber, you'll continue to make your monthly mortgage payments to Caliber after closing. So we don't sell our loan to a Wells Fargo or a Chase or a Citibank or whoever. So it's nice to keep the relationship with the purchaser after closing, because stuff always comes up after settlement that you have questions on, and it's always nice to have a contact that will assist you with that process. So some of the benefits with Caliber is we have a lot of affordable home ownership programs. We spend a lot of money on high-tech online processing. It's a simple process. We have great customer service. We have notifications via your mobile phone, et cetera. And as I mentioned, continued relationship with us after closing. Next slide. We have a lot of different loan options, which you can pretty much get from any lender locally or nationally. We have normal conventional loans, jumbo loans, renovation loans, which are a big thing right now because there are some properties that are run down and you don't have the money to buy the house and also put the money into it. So we'll help you with that by including funds that are needed for the renovation of the property to help you buy that property and fix it up at the same time. And of course, the last thing is the government loans through FHA, VA, and USDA. And quick thing, I saw a question about VA loans. VA loans are they're great loans. You'd be surprised. You're helping out a veteran achieve home ownership. The appraisal process is not as bad as it used to be, 20, 30 years ago when I first got into business. Yes, there are conditions of the property that you need to meet, but VA now has a renovation type loan as well. So if you have a rundown property, you want to sell it to a veteran, there is that opportunity to get a renovation loan for that purchaser. Next slide. Down payment. That's one of the biggest challenges is down payment and credit. So we'll work with you through various county and state agencies to help you get the down payment assistance in Maryland, DC, Virginia, and all surrounding counties. They all have their own little special programs to help you achieve home ownership. Credit challenges. I do that every day. I pre-qualify people, check their credit. Their credit may not be where it needs to be, but we have processes that we can run that credit through, and it comes back with recommendations as to what the borrower needs to do to try to get his credit score up. So we'll share that with all the borrowers once we do that. Next slide, please. As Jackie mentioned earlier, before she can go out and start showing you houses, you need to come to the lender and have us review all your documents, review your credit, calculate your income and your debts, and determine how much you can qualify for. It doesn't make any sense for you to be looking at houses with Jackie until you know how much you qualify for, and you'll have that pre-approval letter in your hand. When you get ready to make an offer, you're good to go with Jackie, and she can write that offer for you. She already talked about finding a new home, contracting to the lender, doing the home inspection. And I think there was a question about the home inspection as well in the chat. Realtors will refer home inspectors to you, but as far as I know, I think you can use any home inspector you would like. That is something that you're entitled to. Whether to have a home inspection, it should be built in the contract. In this crazy market that we've had, a lot of people have been waiving inspections, but they still do them. So yeah, I think you should be able to get your own home inspector. Processing and underwriting, we'll talk about that. Final approval, closing and funding. Jackie mentioned those type of things, that once everything's done on the file is when we send the money to the title company, and you go and sign the papers and you get the keys handed over to you. And then you're a homeowner. Next slide. I briefly mentioned pre-qualified versus pre-approved. What's the difference? If you call me up and you want to get pre-qualified and you don't want to pull your credit, I'm going to ask you roughly what is your credit score, and then I'll base my pre-qualification on that credit score, roughly what you tell me your income is, and roughly what your monthly debts are, and I'll be able to calculate how much you qualify for based on that. That's a pre-qualification. I haven't looked at your credit. I haven't looked at your income. I haven't looked at your debts. So pre-qualification is not that strong of the base. You really need to get the loan pre-approved, where I review your pay stubs, W-2s, tax returns, bank statements, ID, and credit. And then I can generate a letter and give it to Jackie So then she can start showing you properties. Next slide. Factors that can affect the home loan's interest rate. If you're buying a year ago, you're at 3%. If you're buying now, there's factors there that you have no control over. The inflation, as everybody has seen, gas prices, food prices, everything, interest rates, everything is going up. And it's unfortunate that neither myself nor you can control those interest rates. So other factors that normally control interest rates when it's not so volatile in an increasing interest rate environment would be your credit score. The type of property you're buying. Condo carries a little bit of a higher interest rate. How much money you put down? More money down, you probably get a better interest rate. Debt to income ratios. If you have a higher debt to income ratio, you're probably going to pay a little bit of a higher interest rate. So those things are, normally you can deal with it in a normal environment. Right now, the rates just keep going up. And the Fed, as I'm sure you heard, is going to increase probably a couple more times before the end of the year. So we're blowing right through 6%, probably on our way to 7%. When I first got in the business in '92, I was already a homeowner. I bought my first home in '87, and the interest rate at that point in time was 12%. So safe to say, rates right now, historically are not terrible. 5-6%. I think we were spoiled with the 3% we had there for a couple of years during the pandemic. But 6% is still a very good interest rate, and you can still buy a property. And I wouldn't forego buying a property thinking the interest rate is going to come back down, because what happens? The price of the properties keep going higher. There's not much inventory. So when the rates do start coming back down, that property value went up higher, and you may have a lower interest rate, but now you just lost out on the appreciation, and you're paying the same monthly payment, if not higher. So as most people say in the real estate business, when's the best time to buy? Now. So don't wait. Next slide. Credit scores. Everybody is always asking about credit scores, and I spend a lot of time every day talking with people about that. And obviously, payment history. Paying your bills on time is one of the best things to do to maintain your credit scores. Amount owed. If you charge up your credit cards to almost the max, that's going to have a negative effect on your credit score. So you want to, one of the things we always tell borrowers to do if they want to get their credit scores to go up is to pay down the credit card. Length of a credit history. If you have an established credit history, that's going to help as long as you're paying your bills on time. Opening up new accounts can have a negative effect on your credit score. So don't apply for stuff if you don't need it. It's nice to have maybe a couple of credit cards. Obviously, if you need an auto loan, obviously a mortgage loan is fine. So the types of credit in use can also affect your credit score. Getting loans from a finance company or one of those companies that lend you based on paychecks or your payroll or whatever, those things can have a negative effect on your credit score. So obviously, the higher the credit score you have, probably the better the interest rate you're going to get. And that's all relative based on the current market environment of the rising interest rates. So, obviously there's Equifax, Experian, and TransUnion. Most people can monitor their credit scores via the Credit Karma and other companies like that. So it's not a bad idea to do that. But when you want to get qualified for a mortgage, it's best to get me to pull your credit, see where we are, run the numbers, and generate the pre-approval letter. Next slide, please. Debt to income ratio. Once we know your income, we're going to calculate your income, whether you're a salaried employee, hourly, commission, any type of income, self-employed. We're going to go ahead and look at 2 years worth of income and determine what income we can use for qualifying. Then we're going to look at your monthly debts. What debts do you have? The rent, which would hopefully go away. We're not going to count that against you because you're going to be buying a house. But we're going to look at your credit cards, any auto loans, student loans. And one of the things that we look for on your pay stubs is if there's any deductions for judgments, tax liens, alimony or child support, things like that. And we'll also look for that on your bank statements. You know, we do ask for 2 months bank statements, and you'd be surprised some of the things we find on those bank statements. So we're not only looking to see how much money you have in the bank, we want to see if there's any monthly charges that are coming out of your account that don't show up on your credit report that we should be concerned about. You'd be surprised there's undisclosed debt that doesn't appear on the credit report that can show up on a bank statement. So we obviously want to keep the percentage of the housing payment compared to your gross monthly income in the green, or 34% or less. Yellow is fine. The red, you know, the debt ratio could be 50%, over 50%. We have programs that allow for that. As long as you have a demonstrated history to maybe handle that type of payment where your debt ratio is higher, or you might have someone that's living with you or supporting you in making that mortgage payment, then that red is not terrible. But yeah, we can get you approved with debt ratios over 50%. Again, it depends on the program. So keep that in mind. Next slide. When you have your house and you've settled, you have the keys, every month you're gonna be making a mortgage payment. And in that mortgage payment, there's a part of it that's gonna go for the county real estate taxes and the homeowner's insurance, which covers your new home. So we wanna make sure that those things are in force and paid for every year when they come due. So that's why it's included in the mortgage payment. That way we get the bills every year from the county and from the insurance company, and we'll pay them directly. The last thing we want to do is have your insurance canceled. We'll get notification if you canceled it, or if we don't want real estate taxes to become delinquent. So we'll include those things in the monthly mortgage payment and set up an escrow account, and that's where we pay the bill every year. Next slide is title insurance. Jackie mentioned you're gonna be settling with a title company. They're the ones that are gonna look at the history of that property in terms of in the land records, previous ownership, previous liens, make sure that there's nothing that is still outstanding that could affect your ability to get clear title to that property. So that's why you purchase title insurance when you buy a home. You know, just like you have auto insurance, homeowners insurance, life insurance, you know, there's just things that you can't control, and you want to make sure that you're covered, and the title insurance protects you against any unseen or unreleased liens against the property that were not picked up in the title work. So you're protected there as well. It doesn't happen often, but when it does, it's not fun. So it is something that you know, you want to make sure you have. And in the chart there, it talks about inaccurate land surveys. You might have a dispute with your neighbor. So, you know, you got to be careful with that kind of stuff and make sure you have that title insurance, especially with, you know, property access. We talked about 10-acre properties earlier. You could be in a place where, you know, you shared access. So just make sure you have that title insurance. Next slide. Our service to you doesn't end in closing. As I mentioned earlier, we service our loans. So again, you can call me. You can set up monthly payments. You can set up bi-weekly payments, bi-monthly payments. You'll get online statements, and the statements will have my picture on there. So you'll always be reminded of me. I'll always remind you, whatever. You'll always see me there. So any questions, problems, my phone number will be there. Feel free to give me a call. Next slide. As I mentioned earlier, pay stubs, W-2s, 2-year history of employment, 2 months bank statements, retirement accounts. That always helps in showing that you have the ability to save money. We want a 2-year history of where you've lived. Obviously, we want to see a valid driver's license. Make sure you're a legal resident of the U.S. if you're not a U.S. citizen. And then we'll collect money for the appraisal fee on the property to make sure that the contract price that you pay for the property, the house is worth it. Next one. Please don't throw anything away. Keep all your originals. because we'll need to get documents from you. I know you can get a lot of those things online now, so it's not as important. But provide with all your documents that are needed. If you don't have the money and you're getting money in the form of a gift, we got to document that. If your income changes, we got to know. Cash doesn't exist in this business. We cannot verify cash. So if you have $10,000 at home that you've been hiding and you deposit in your account, we can't use that. Don't open up new accounts. Don't close accounts. Don't make a major purchase. Don't change employers. You can, but it just complicates things. So feel free to reach out. Next slide. Like I said, I've had 30 years in the business. I work for Caliber Home Loans. Contact me today. I'd say if you want to try to refinance, but that ship has sailed now that the rates are in the 6s. But we'll be back to an environment where we're low rates again. It's very cyclical. Like I said, 30 years in the business, I've seen all the ups and downs. Eventually, we're going to head right into a recession. Rates are going to drop, and then we'll be back where we were, 2 years ago. So, any questions that appeared in the chat while I was talking?
Yes, Louis. Aaron Johnson is saying, on the topic of interest rates, do you provide rate locks, and how long are the rate locks?
So yeah, rate locks are huge right now. Normally, you can go 60 or 90 days on a rate lock without any additional cost. The longer the rate lock, the little more it does cost, but it's built into the rate. Long-term extended locks, like 6 months, those do cost money, and you usually have to pay money up front to be able to lock that interest rate in. What else?
I think Jackie answered the other questions that were in the chat. We don't have any more at this time.
Okay.
So please feel free if you guys have any additional questions for
Yeah, if anybody has any other questions, let me know. If not, thank you so much for allowing me to have this presentation and give you a little background on the lending side.
And Louis, would you please, if you haven't already, put your contact information actually in the chat?
I'm doing it right now.
All right, folks, we have a few minutes left. This is the time to ask anything you've always wanted to ask about home ownership as an owner, as a landlord, as a first timer.
I have a question for Louis. Under what circumstances would you recommend someone lock their rate?
Obviously, now is right when I get that ratified contract. We are in such a volatile environment right now. I could quote you a rate in the morning, and you bring me a contract that afternoon, and I go to lock them in, and the rate changed. It's worse. We get repricing during the day now. It's very frustrating, but I would recommend locking in as soon as you have a ratified contract. 6 months ago, 9 months ago, you could float. It wasn't really worth not locking it in because the rates were already pretty low and we're not going to go any lower. So obviously, in a rising interest rate environment, you're locking in now. A year from now, after all the rate increases have occurred, we'll probably start inching back down again. We're in a recession, unemployment's going up, like it has in the past. You would probably float and ride the market down. Okay. So, but at this point, we're locking in.
I'd also like to give our participants an idea of how much it costs to actually own a home. I mean, this might sound like a basic question, but you can go to these calculators, but you all have done recent transactions. Let's say, pick a house price, I don't know, $300,000, $250,000, typical down payment. How does it compare to renting? Just so people get an idea, because a lot of people think, oh my goodness, it's so much more expensive to own a home than it is to rent. But rents in Montgomery County are pretty high.
I mean, for example, you mentioned like a say $300,000 house in Montgomery County. When I was working up numbers, 7, 8 months ago, that payment would be under $2,000. Now that payment is, $400 a month higher. I mean, you're probably, $2,300, $2,400. I mean, it's been a huge increase when interest rates have gone from 3% to 6%. So, it's definitely affected the market. The purchase business is down. Combination of the higher interest rates and the lack of inventory. But still, the longer you wait, the more you are subject to increases in value and things like that, because it's still very competitive out there in buying properties.
Louis, can you speak to points about purchasing points to lower the rate?
So in regards to interest rates, there's no such thing as one interest rate. Okay, I can have 5 different people come to me today, and I can quote them 5 different interest rates. As I mentioned earlier, credit score, type of loan, type of property, how much money they're putting down, type of program. All those will affect the rate. And then picking one person, whatever rate I quoted him, I could give him 10 different rates as well. I could give him a higher rate, and when I do that, I'm giving him a lender credit, meaning, I give him a rate of 6.5%, but I'm going to also give him $2,000 versus 6%, where it's not going to, he's not going to pay me any money, or I'm not going to give him any money. Or I could give him 5.5%, a lower rate, but it's going to cost him, $2,000-$3,000. So points are things that you can buy the interest rate down, or negative points would mean the lender is giving you money. So there's a wide range of interest rates I can offer anybody. It's just depending what the cost is, as to whether or not it's beneficial to that borrower in his situation.
Okay. So Louis, we have a question. It says, are there down payment programs that don't require a year of classes? NACA is a struggle.
A lot of the first-time home programs that I do allow for online classes. So they're very easy. They're offered by Fannie Mae and Freddie Mac. I think NACA requires, I think you might have to go in person. I don't know. I've not done NACA in a long time since I've looked at it. But no, there are some programs online that me as a lender, depending on the program that I do, let you go ahead and use those. And I think I've never heard people complain about those. And they're very educational. So you get a certificate at the end, and then you just send me the certificate and we're done.
Okay. All right. We have a question from Lily. She said, why is a high debt ratio penalized?
More risk. Okay. So the higher the debt ratio, that means that more of your income is going to the housing payment and leaving less disposable income for other necessities that you may have. So one of the ways that we can get those people with high debt ratios approved is if they have excellent credit scores, which means they've had the ability to manage their credit and their debts, et cetera. They might have a big retirement account, a lot of money that they've saved, a lot of money in their savings account. So those are things we want to look at. They may already be paying a high monthly payment in rent compared to their new housing payments, so there's a minimal increase. So those are things we want to look at to determine how high of a debt ratio will go.
Okay. All right. So Kiara asks, what are recommended programs for first-time homeowners?
So depending on where you live, there's programs I'm sure available in any one of the jurisdictions where you're located. Fannie Mae and Freddie Mac offer minimum 3% down programs for first-time home buyers. They're based on income. So you have to have, I think in Washington State metropolitan area, I want to say it's below 127,000. So, but really, it's the biggest benefits are in those special counties, DC, Maryland, Virginia, and the counties. They have special programs that you can get money from.
Okay. And another question, it says, I have a pre-approval, but what things should I look for to help keep closing costs down?
So points, like we just talked about, that of course increases your closing costs. But you really want to just look at their standard fees on the closing cost estimate that you're going to get from any lender, which you cannot control whether you go through me or another lender. So the attorney's fees, the settlement fees, the county and state fees, it doesn't matter if it's me or Citibank or Bank of America doing the loan. They're gonna be the same number. So what you really want to zero in on and focus on are the lender fees. Okay, the lender will normally charge you a processing fee, an underwriting fee, and then the small credit report fee, and then a couple other small fees, the appraisal fee. So those are the things you want to look at when you're comparing estimates from different lenders.
Okay. So I think, Val, tell me how much time I have. Is it hard for someone who doesn't have a lot of credit but has a high FICO score, I assume, to get a good loan?
Is it hard for someone who doesn't have a lot of credit but has a high FICO score? No, the beauty of today's financing is a lot of this is automated. You'd be surprised. All the information that I get, I put it into the Fannie Mae or Freddie Mac system, and they, whatever you put in there, you want to make sure you verify it, pay those W-2s and all that, and then they'll spit out the approval. So as long as you have a good credit score, you may only have one trade line. You may only have like a Capital One credit card with a $500 credit limit that you've been using for 6 months, but your score is 750. I've seen that, and you're fine. So that does work. So not having a lot of credit for a normal conventional loan works. If it's a jumbo loan, that's a whole different story. They have a lot more requirements as to what they're going to, 2-year history of employment. Of credit. Multiple accounts that have been used, things like that. So it's a little more strict.
What is the approximate jumbo loan limit right now? Just so people know when you say jumbo. So
like Fannie Mae and Freddie Mac, which is a conventional loan, that's one that pretty much everybody uses. FHA, they'll lend up to, I want to say it's 822,000. So any loans over 822,000 becomes a jumbo loan. And it's a totally different market. They're much stricter. Most of them require a minimum 10-20% down. Require a certain number of trade lines on your credit. They require maybe 6 months, 8 months of reserves after closing, and you have to have a lot of money in the bank account after you come up with all down payment and closing costs. So and those are, they're just harder. They're available, but they're just harder to deal with.
Hey, Jackie, I have a question. So these advertisements I see on TV saying express home buyers, we buy your house in 7 days. What is that? Is that something you recommend? Is it possible? Is that a good type of way to sell your home?
It depends on the situation. They prey on desperate folks or people whose homes are in bad conditions. So they allow the seller to not have to make repairs, to not have to go through gyrations to put the house on the market. But what they don't tell people, so they buy your house as is, but they lowball you and they tack on a lot of fees. I think they should say, oh, we move you, we pack you. And I had a client who sold their home through, that type of home buyer, which they did. They bought it. They didn't ask her to repair it or anything. Of course, they turn around and sell it, fix it, turn around and sell it. But they promised her movers to pack and move her. And then at closing, when the movers packed her and they were ready to move, they presented her with a $2,500 bill. So that I find them to be not forthcoming. Their contract with their clients is 1 page long, and that's very small for that large of a transaction to just have a 1 page contract, and there were a lot of holes, and it's not.
Thank you.
Thank you, Sheila, for getting to all the questions that we could in the chat. If you have other questions, please check your chat for the contact information for both Jackie and Louie. They would love to have you follow up with them. And we hope that you have expanded your knowledge, enhanced your interest in pursuing either home ownership or more properties. So we're going to put up the poll questions that we had in the beginning and see if there's any difference from the start. So if Sabrina would do that. I also want to draw your attention to the chat. There's a survey link. It's very short and it will give us the opportunity to continue to improve. So go ahead and take those post-webinar questions, and then we'll direct you to the survey link and wrap up.
Val, can I answer one question I just saw that popped up?
Yes.
So the question was, the African-American community has notoriously been treated unfairly by lenders. What are some red flags you think we should look out for? So one of the good things about what we're doing now is everything's automated. So it's based on, you know, the actual income, the actual debts, the credit score, the assets you have in the bank. So it doesn't show if you're Hispanic, you know, African American, you know, any other minority. I deal a lot. Probably 50% of my business is Hispanic because I speak fluent Spanish. And the beauty of the automated system is it doesn't really take that into account. It looks at the actual qualification of the borrower based on income, assets, debts, credit score, and things like that, and reserve. So I guess that's one of the good things that the Fannie Mae, Freddie Mac, and HUD are doing to try to eliminate some of these things that have been going on in the past.
I'm glad that question was asked, because I wanted to wrap up by, again, reminding you to please click on this survey link that is in the chat and give us some feedback, but also end with just something to think about. There is about a 20%, a 20-point difference in the percentage of homeowners in Montgomery County between white homeowners and Black homeowners. 20 points, from about 66, 67% for white homeowners to the 40s for Black homeowners. And many people would be surprised to know that the homeownership rates for Asians and for Hispanics are higher than for Black people in Montgomery County. So when we think about why this is important and how many more people we would love to engage with in our community, homeownership is a path to a lot of things. There is wealth. My mother used to say, there's only so much dirt, go get some, right? It's only going to increase in value. And what it allows you to do is you can build equity or value in that home that you can pass down generationally. You remove the stress of where is somebody going to live. When you keep that in your family, you can grow your own food, control the impact of inflation on your household. You can borrow against it for college or whatever the asset you want to bring into your family. But just think about that. We have a lot of work to do. And we thank you for being part of this conversation. We hope that you will spread the knowledge. You will get these presentations, and you now have two experts at your disposal. And I mean that thing, because I've known Jackie for over a decade, and she knows that when I say something, I mean it. And Jackie is going to return your call, and Jackie and Louis work together. So Louis knows he's under the same expectation. And we brought them in because they want to serve our community. And it's not a hope or a dream, they already do. So thank you on behalf of the Potomac Valley Alumni Chapter of Delta Sigma Theta. Please continue to stay in touch with us as a chapter. Sabrina or Sheila, put our website in the chat if you would. We're going to have more workshops, more things you can be involved in, sorors, neighbors, anybody in Montgomery County that sees this as value, please pass it on, including the presentation you will receive as a participant in this webinar. So thank you very much and have a good evening.
Thank you. Have a good night.
Thank you, Daphne and Carrie and Patricia. Thank you, Aaron. Thank you, Nichelle, Reagan, Leslie. Thank you, Lily and Janice. Good to see you, Tiffany and Bree. Thank you, Lily and Leslie and Monica. Thank you, Ora Murray. Thank you, everyone. And a special thank you to our presenters, Louis and Jackie. Extra special thanks to Sora Sabrina and Sora Sheila for working the chat, working the tech. And of course, to Sora Tevlin Thompson, committee chair in her absence, all of our officers and leaders, and our wonderful and beloved president, Sora President Brooke Holmes. Everyone have a good evening.
Good night.
Good night.